Hi, Jonathan York from Bay Financial Partners, looking at investment markets. Another pretty interesting week for equity markets. News that the US and Mexico have managed to negotiate a new trade deal that would then replace the old NAFTA. That was sort of quite interesting because NAFTA was always part of the US, Mexico, and also Canada. But Canada seemed to be excluded from the negotiations. Trump came out and announced that he had a new deal with Mexico and that was going to replace the NAFTA deal, and that was all good. Now we're just left with the issue where Canada has to sort of ratify and accept what has been negotiated. Gives an interesting insight into the ways of sort of President Trump sort of operates. Looks to sort of maybe sort of divide and separate, negotiate, and then come around and say, well, actually, I've got this deal in place. Are you going to accept it or not? But the markets liked what it saw. Obviously, an easing of sort of trade tensions. The S&P briefly broke above 2,900. That's sort of quite interesting because over the last sort of year, the low has been close to sort of 2,450. Now, obviously, we need to make some further gains now on the rest of the sort of trade talks taking place, and obviously the big one is China. There's a little bit of sort of back channel sort of chatting going on, but at present very little sort of ground is being made. Lots of threats, more sort of tariffs coming through almost sort of by the week, and it's just going to be very interesting to see really what happens when both sides sort of actually sit down and try and negotiate what can be considered to be a fair sort of trade deal for both. But as sort of stated, while we are sort of gradually chipping away and sort of reducing some of the trade tensions, that's taken some of the sort of worries away from the market. And again, if you look at the actual fundamentals, the US economy and the global economy still looks in pretty good shape. We're certainly looking overall, tensions out there, say, certainly on the trade, are easing a little bit. And that's positive for markets because, the data out there is very supportive. We've got a pretty robust global economy, and that should still point towards sort of slightly higher equity prices over the next sort of 6 to 9 months at least. So it still appears to be on track with the Fed to see 2 more rate hikes this year, and then 2 more by sort of end of the first half of next year. So potentially 4 rate hikes from the US over the next sort of 12 months. Interesting though, quite a bit of that is already sort of priced in, and certainly the US dollar isn't really sort of benefiting too much further from sort of increased interest rates. If anything, some of the dollar bulls out there now tend to think the dollar may have peaked and may just look to sort of soften over the next sort of 6 to 9 months. Obviously, that will be very good for US exports. Oil still hovering around the sort of 67, 68 bucks a barrel. and again, very little sort of fresh news out there. No further news on Brexit, although there is a little bit of unrest in some of the German cities in terms of sort of immigration, and it's just going to be interesting if that sort of spills over into the rest of Europe. New Zealand government facing a little bit of pressure out there as well. Obviously, there's sort of quite a bit of sort of industrial unrest in terms of nurses, teachers, some of the bus workers as well are sort of pretty sort of unhappy with sort of pay deals being put forward, but also as well as in a market sort of drop in business confidence as well. Some of the criticism has been that the new government has sort of come forward and it's got lots of committees, lots of reviews taking place, and that is just sort of undermining people's confidence out there because what you're doing is sort of sitting around talking about things rather than actually putting new policies in place. So as we come up to sort of the first sort of 12 months of the new government, facing a few little issues out there, and it's just going to be very interesting to see how they address those and sort of get back on the front foot. Here in New Zealand, there was good demand for that Z Energy bond that was oversubscribed. Potentially there's a Spark retail bond out there as well. And if you're interested in that, call us on 0800 867 323. Now, if you are looking for other options, there are plenty of alternatives available out there. And call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. And we look forward to speaking to you soon.